All right, welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trading system for free. And the system is currently up 21% year to date. Uh, Please type in the chat that you can hear me. I'm going to assume that you can hear me. Okay, and also be sure to post any questions that you might have so I can answer them during the broadcast. So you want to post those questions earlier rather than later. Okay, so first let's get into the earnings edge. What happened last week? This is the earnings edge account here that you can see. And we traded Costco and we had a winner there, $243. So that's another win. So my record is 21 wins, 6. Sounds good. Thanks, guys. 21 wins, 6 losses, 3 ties. And since I started implementing the 8 filter system, being a little more picky, the record is 6-1. And you can see I started with a $5,000 account. So I'm down about 0.5%, like 35 bucks down on the year. So basically at break even. There's a lot of commissions with this. Let's look at that real quick. Let's see if I can get that in there. Yeah. As far as the commissions, let's see, where can I see that? Right here. So you can see my profit here is $1,223, but really I'm at break even. So you can see that the commissions are quite heavy with this system. So you want to know that going in. But if you want to trade this and follow the alerts for this, there's a link in the description. All right, second, let's get into my Premier level 5. This is the trade that I like when you have more capital. It's very conservative, drawdown's very low, and we can get some good, decent returns. So currently, if we look at this account, we are up. We started with $30,000 on April 8th, and we're up about $1,800. So that is about 5.5%. And our lowest drawdown was around 3.5 to 4%. And if you compare that to the S&P 500, the S&P 500 has been down 19% since April 8th, and it's currently down 14%. So we're outperforming by about 20% here. And our drawdowns are very low. So we basically use options to lower our risk and outperform the S&P 500. That's what this is all about. That's what this system does. So when you have a little more capital, this is what I would strongly recommend. There's a link in the description to sign up for the Premier Level 5. Okay, so let's get into the safe wheel. Now, one thing about the safe wheel, I want you to know that there's a link in the description if you want to get the flow chart, because I haven't gone over every scenario, but the flow chart goes over every possible scenario. And then of course I have the filters, where the 6 filters that I use to pick a new stock for the safe wheel, and that's also available. There's a link in the description for each one of those, or you can get those together as a bundle. Okay, so let's talk about the safe wheel. You can see that we're up about $1,086. Started with 5,000. So again, up about 21% with a safe wheel. We're trading FCX, or I am trading FCX. And you can see that what happened last week was that FCX went down, and we sold the $32 put. So it was above $32. Now it's $29.75. So I got assigned 100 shares. So I'm going to go to the flow chart. It's going to tell me what to do. So the stock is down, and I was assigned. So what I want to do is sell a covered call at this 32 price or better. a little bit higher than 32. Let's see what I can do here. So I want to sell a call in this expiration cycle, the closer expiration cycle, and I want to get at least at the 32.50 level, and I want to get at least 1%, or over $32, or this should be over 32 cents. It's not. It's 14 to 16 cents. I can't sell a covered call. There's not enough premium. Okay, so it tells me so the next question is the overall position profitable? So how do I know that? Let's see if I go to the account statement. FCX year to date, $172. Overall, this position is profitable overall, so I'm going to go ahead and just exit. I'm going to take my profits, my $170 profits, and I'm going to start over. Now, if I was going to start over with FCX, I would consider just selling. That's what I did last week, I believe. If I was going to start over with FCX, I would just get rid of these 100 shares and just start over. And if I were to do that, let's see, we're at 29.73. So I want my put hedge to be at least 80%. So let's see, 29.73 times 80%. It needs to be at about 24. It looks like it is. It's at 26. So my put hedge is in a good position. It's 151 days out. So I could just go ahead and trade out of this, and then my overall position would still be ahead, and then I can just start over. So I hope that makes sense. There might be a few questions about that, but I might just start over by just getting out of this position. So I would take a loss on this position, and then keep this put hedge. It's a good put hedge because it's only you're at 30 here and this is 26, so it's actually a lot closer than the normal put hedge. So it's actually a good hedge to have to start over. So I could get out of this total whole position and get a brand new stock. But I think what I'm going to do is I'm just going to exit out of this, take this loss, pretend like I'm starting all over again, but then I'm not going to move my put hedge. I'm just going to keep it there because it's at a really good position, and just go from there. So it's a little bit I mean, I don't want to say that I'm being subjective, but what am I going to do with this put hedge? I'm going to roll it down. What do I need to be at? 24? What's the 24 look like? I guess I could pick up a credit by rolling this down. So let's see here. So I could do that. So if I were to start over, I probably should do that. So what I'm going to do, because there's no reason to have a big high price put hedge that can depreciate on me. So I'm just going to go totally by the rules. I'm going to exit the whole thing and start over. So let's go create closing order. Try to get as much as I can. And I'm going to create closing order here. 239 is the mid. See if I can't get a little better than that. No, maybe not. Okay. So now we're fresh, starting over. We have no positions on. Okay. So this time I'm going to start looking at, so I have my list, and so now I have my 6 criteria that I'm going to use to pick a new stock. The first thing is going to be proper sizing. So I'm going to pick something, close to $30. I'm going to look at Uber first. Let's see what Uber has to offer here. So the sizing is correct because it's around $30. Next question is, what is the IV? Because we want the IV to be in a certain range. So let's go here. Um, we want it to be between 60 and 100, and it is just over 60. And then we'll check the liquidity. So I'll come into something a little bit out of the money here, make sure that I'm not more than $3 or 3 cents wide. These are very close to 33, 35. That's only 2 cent wide. Here's a 3 cent wide. 4 cent wide. It's a little bit close on liquidity, but I like it though. I think it's good enough there. And then earnings, let's check to see if there's any earnings coming up. I can just look at the implied volatility, and I can see if earnings are coming out next week, then this number right here would be higher than that. Or if it's coming out in 2 weeks, this number would be higher. But you can see that there's no significant spike. The earnings might be coming out here. You can see how that's kind of spiked up, but that's far enough away. If it's the next week or two, I wouldn't do it, but that's good. It passes the earnings test. Is the put hedge strike available? So right here, I'm looking for the put hedge between 150 or higher. I'll go to the 179. What are we currently trading? 31.50. So 31.5 times 80%. 25 would be my thing. Yeah, that's available, the 25. And make sure that this cost isn't over like $4, which it is not. So Uber looks good. I'm going to go ahead and go with Uber. So first thing I'm going to do is buy my put hedge. I'm going to buy 3 of these. I have $5,000 to $10,000. Therefore, I'm going to use 3 put hedges and one. I'm going to sell 1 put and I'm going to buy 1 call. So a ratio of 3 and 1 and 1 with this sizing. If I had $10,000, I'd do a ratio of 6 and 2 and 2. Okay. So let's go with the 25. We're going to buy 3 of these to get our put hedge on. I want to pay as little as possible, the mid 208. Maybe we'll get. Let's see here. Now it's up to 210. Okay, so 208. All right, now we want to sell our put out of the money. Currently at 31.65. Ooh, I forgot to check something to make sure there was enough premium. Did I have that on my list? Sizing, IV, liquidity. Premium. Number 7, make sure the premium is there. Premium level's good. Maybe it's 7 things. I don't know, gotta check through this list again. But I'm gonna make sure that my premium level's out of the money. Okay, so what would be out of the money? 32. I'm sorry, yeah, 32 would be out of the money. And make sure that that's higher than 32, which it is. So we do have enough premium. But actually, we don't have to check the premium because we did do that now that I'm kind of thinking about it. We did check the premium when I looked at the IV. So yeah, I knew there was going to be enough premium because my IV was between 60 and 100. Okay, so that's why that was not in there. Okay. If that doesn't make sense, you guys just go ahead and ask a question about that. So where am I going to go here? I'm going to go out of the money and I'm going to sell. So I'm going to go out of the money just 50 cents. I'm going to get some good premium. I'm going to sell this 70. I'm going to get this 76, 75. The account is not approved. Okay, that's weird. Sometimes these things happen. Let's see here. Oh, all right. I made a mistake there. Good. I'm glad that that did not go through. I'm actually trying to sell a put. I'm sure you guys tried to warn me about this. I should be reading your stuff. That's a call. No, that's a call. Okay. Yeah. Caught me. All right. Let's go out of the money here. 31. So 31 would be out of the money. So I'm going to go here, sell this put. All right. I'm glad that that got rejected. I made a mistake there and got away with it. All right. So mid price 64. I knew that eventually was going to happen in a live stream. All right. So make sure we're in the right expiration and everything. Let me go back. We're in the right expiration. We're selling a put. We're out of the money. Let's sell this one. Okay. All right, so we sold that. And let's go to, what are we gonna do now? We're gonna hedge our hedge. We're gonna buy something $5, $6. I wouldn't pay $7. So I'm gonna buy a call, but I'm not gonna pay this much. I'm gonna buy this one here. Just one, 35.50. Okay, so there we go. Now we're set up with Uber. Good to go here. We're done with FCX. We made money with it. All right, so let's get into my questions. Okay, good morning, Kevin. Brad, is there any way to cut down on commissions? Maybe use a different broker. I don't see any way to really cut down on commissions based on, trading different than what the how I have the safe wheel set up. Is a 5-step still a good trade in the market conditions we're in? With the 5-step, that is just a training course. I've found back tests were really well, everything looked really good, but then when I forward tested it, it just basically broke even. So I would not trade the 5-step with any kind of significant capital. I would just trade one tranche. That way you can learn how to trade and how that system trades. Because once you learn how that system trades, you can jump right into the Premier Level 5 and be ready to go. Because the Premier Level 5 is something where I would put capital. So I would only trade one tranche of the 5-step when you're learning how to trade it. And even if you know how to trade it, I would only trade one tranche. It's a learning course. Second tranche time, or are we profitable? So maybe reset. Yep, we reset. Okay. So profit year to date is a close, not open P&L. Right. I look at the total P&L. Did I make money with that particular stock? And if I did, and it's starting to get to where I'm going to have to add a second layer, I prefer not to add second layers. And if I can avoid that, I'll just take my profits and move on. Okay. But we're not profitable for the week, right? So this is Anna. If someone just started last week, they won't be profitable. So we sell another put. Yeah, if you're not profitable yet, you would sell another put. That is correct. So you'll be a little bit off of my cycle. Yes. Hey, Will, you may want to get out of the loss so you can follow along with this trade. Yeah, that's your call. It might be easier to follow along. Just depends on how comfortable you are with the trade. So that is definitely an option to just take the loss and come with me. Underground sausage, no, that's a call, right? Luckily, I got rejected on that. And JM recognized it too, telling me sell the put, not the call. Okay. Underground sausage. Sometimes options restrictions are good for this reason. That's right. I'm glad they are. Brad Mondin on the first strat. Not sure what you mean by that. Joe, I kept FCX and rolled a put hedge for a credit, then sold a put and bought a call. Figured reducing the cost of the put hedge and the math worked out. Is this breaking the rules or a new trade? That's not a new rule. That's following the rules and creating a completely new trade. And you chose to go with FCX rather than Uber, and you might come out ahead by doing that. So that's not a bad idea at all. I considered that. Jason, if you own 200 shares but are only selling one covered call for the week, should you buy one long call or two to protect the put hedge? You only need to buy one because you also are long 100 shares, so that's also protecting that put hedge. Okay, Walter, Carl, subscribe, like, and hit the notification bell. And I should do this at the beginning and the end. I should. I'm going to maybe add that to my notes. One thing before I go, I want you guys to know next Monday, I will not be here. I will be here on Tuesday. So you'll get the notification. But if you don't see me here on Monday, it's because I pre-planned that out. I've got somewhere to be and I won't be in the office. So next Tuesday is when I'm going to do the live stream. So there's going to be a day where I'll just be holding that put hedge, and hopefully the market goes down. If it goes up, hey, it is what it is. There's going to be times when you're not going to be available to make trades, and I won't be available Monday. So you'll get the notification that I'll be here on Tuesday next week, not Monday. Okay, I don't see any more questions. I'll give just a few seconds here to see if anyone else has any questions. Okay. All right, what I always like to say. Oh, here we go. Anna. My bet I was up $43. For some reason, Tosh showed a loss on the open, but something happened in the assignment. So she went to Uber. Okay, good. I'm glad. Mahesh, the US dollar appreciated so much against currencies, and Forex buyers, of course, have to pay a lot now. I see. So the commissions are really hurting you because of that dollar value, the currency thing. Brad, just started with your 2060 and profitable, about to hop on the wheel. Thanks. You're welcome, Brad. 2060 is a good trade. Again, another learning trade. I would not do more than one tranche. Okay, so I'm going to close this out. So remember, if the P&L is not real, what else are they trying to conceal? See you guys on Tuesday of next week.